Hey traders, how's everybody doing? Hope you had a nice day. It is Thursday, February 26th. And yeah, let's get right into the news. So today was a textbook case of buy the rumors, sell the news. And if you've been following this channel, you know exactly what that means because I've talked about that same thing happening with a number of different names over and over for the last month or so. So let's break it down. Markets just wrapped up a split session. Here's where we closed. S&P 500 fell 37 points, down 0.5% to settle in at 6,908. The Nasdaq got hit the hardest, dropping 273 points or 1.2% to close at 22,878. Meanwhile, the Dow Jones barely budged, slipping just 17 points to end the day at 49,499. Basically just flat. So what we saw today was a clear split. Tech and growth got punished while the old school Dow held its ground. That's a rotation story, so we're going to talk about that a little bit. Here's where everything gets kind of interesting. Nvidia reported earnings after the close last night, and those earnings were genuinely spectacular. Revenue hit $68.1 billion. That's up 73% year over year and well ahead of Wall Street's estimate of $66.1 billion. Earnings per share came in at 1.62, beating estimates by 9 cents. Data center revenue, a record $62.3 billion, which is up 75% from a year ago. And guidance for the next quarter, $78 billion. That crushed the $72.8 billion estimate. So obviously, by every objective measure, this was a complete blowout. And yet Nvidia still dropped 5.5% today. The stock just had its worst day since April. Why? Because the market is in what one analyst called prove it mode. And, you know, as I said, we've seen this over and over again in the last couple of months. Expectations had already been baked in. Investors bought the story months ago. Today was the day to collect. That's the market psychology lesson right there. It's not about what a company did. It's about what it does relative to what people already priced in. Now here's the flip side. Salesforce also reported this week 3.81 earnings per share, up 37% year over year on revenue of $11.2 billion. That's strong numbers. And CRM actually finished the day up 4%, a reversal from its initial after-hours drop. Nvidia CEO Jensen Huang jumped into the software debate today, telling CNBC that he thinks the market got it wrong on AI disrupting software companies. He argued that specialized vendors like ServiceNow will always outperform generic AI tools in their own domain. That's a bold claim. And it moved sentiment just enough to throw a lifeline to some battered software names. Still, the software ETF tracking this sector is down more than 10% just in February alone. On the economic front, jobless claims came in at 212,000 for the week ending February 21st, which is up slightly from the prior week, but still below the consensus estimate of 215,000. The labor market remains historically tight, which keeps the Fed firmly on hold. Markets are now pricing in virtually zero chance of a rate cut next month. So looking ahead, all eyes are on tomorrow's producer price index release. That's your next major inflation data point, and it could reset expectations heading into the weekend. Before we go, one more piece of the puzzle today. Indirect nuclear talks between the US and Iran resumed in Geneva. Progress was described as modest, but the uncertainty kept energy markets on edge, with WTI crude hovering near $65 a barrel. Geopolitical risk is back on the table, and markets are pricing it in quietly. Here's the bottom line. Today wasn't a catastrophe, it was a recalibration. The market is asking tech to do more than just beat estimates. It's asking why those valuations should stay elevated. So until we get a clear answer, expect more sessions like today. Watch the PPI tomorrow, watch how software trades, and watch whether this tech pullback deepens or stabilizes. So that's the main things to look out for. Until tomorrow, have a good evening and see you back here tomorrow afternoon. Bye-bye, everybody.